Okay, 24th of February, Rudy here. Welcome to the Daily Investment Show, where we go through ASX US indices, subsectors and commodity prices to see where we should be investing using the power of the ratio charts. So we start off with the ASX 300. So we finish basically flat for the day. Still haven't broken through all-time highs. So the first of the two sectors is the financials. So it doesn't look bearish. That's consolidating at the highs. So, you know, there's none of these big down red candles. The other big sector is materials. So materials is breaking out. I expect that to continue for a few years now. If we look at the materials to the financials, so we're getting into a stage where you want to say materials have been outperforming financials, then financials had some strength, and now materials are starting to take over. So I'd be having a portfolio weighted away from the banks and into the materials. Our energy sector, so it's just looking very, very juicy. If we compare it to the general share market, get the ASX version. So we've got energy over the ASX 300. So energies now will start adding value to the ASX 300. But again, so you want to be overweight energy, not just sitting in an index like VAS. Our gold miners, so they were flat today, but still trend intact. The gold miners over the financials, so gold miners still outperforming the banks. Our tech sector, God, that's all you can say really. I'll show you an American chart soon too. It looks exactly like this. So discretionary is falling out of bed. Discretionary stocks, staples, they're just hanging in there. So the staples over discretionary. So there's a clear shift away into staples from discretionary. Property, the REITs are gone. So that's high interest rates, not good for them. Okay, so America. So America's just sitting there waiting for direction. Same with the NASDAQ, just sitting there waiting for direction, so we don't know. We can't say it's bullish or bearish until it tells us. One indicator will be these guys though, the Magnificent Seven. If the share market's going to rip, it's going to need these guys to perform, but at this stage they're still being capped by the dome here. So we've got our materials sector, the Australian materials sector over the S&P 500. So again, you don't want to be sitting in some VGS thing or IVV or whatever. You want to be in materials because they're outperforming. So another indicator over in America is the semiconductors. So as long as they're not falling over, it's seen to be as neutral to bullish for them. But here's the chart. Haven't shown this one to you before. This is the basically the tech software ETF. Looks a bit like our stocks. So it's made up of the Microsoft, Palantir, Oracle, Salesforce, Palo, Adobe. So sort of zero-ish. Anyway, that doesn't look pretty healthy. That doesn't look healthy. However, the energy sector, so these are your big oil and gas producers, that's looking strong. The energy sector over the NASDAQ. So you got the oil and gas producers outperforming the NASDAQ. That's because tech's going to need that energy. Okay, so the global gold miners are a bit more stronger than our guys. So they're up. So the global gold miners over the S&P 500. So a bit like our market. You've wanted to be in them since I started the channel February last year. Okay, so the other area supporting America is the mid caps. This is your Russell 2000, so that's still okay. The Russell over the S&P 500, so that's providing some support. So they really need that tech. Your super fund, your high growth option. I don't know if you look at your super, but I reckon since the 27th of October, your super fund's done. This is the high growth option, has done nothing. I'd be surprised if you can tell me you're in a high growth option that is over the last 4 months is showing positive returns. So that's what we do in the channel here, $10 a month. If you had a materials bent to your super fund, you'd have an extra 30% in there. So there's two ways we do it. One is through super funds that allow you to buy ASX 300 shares, so we can put a portfolio together. Or someone like Stake Super, where you can buy ASX US ETFs. We have a portfolio of them. So $10 a month. We do all that. A cup of coffee, or two, depending where you live. So VGS. So you've made no money in VGS since August last year. So same thing, materials focus over VGS, you would have had a lot more money in your bank. Okay, our 1 year interest rates, so we're sitting at 4.16. I mean, if you're really chasing income now, I wouldn't be putting my money into the banks at paying a 3% div when you get a risk-free probably 5 now in a high interest cash account. Or Woodside 7%, that's the way. US 1 year, so there stuff hasn't taken out this high here, so but it looks like it's bottoming. Is that because of inflation, oil prices? The US dollar looks like it's making a bit of a bottom there, and the Aussie dollar looks like it's making a bit of a top. Gold, oh yeah, I saw this one today. So Indian gold imports. So this is 2002 to 2025. So the Indians are going for it. They're not holding back. So US dollar gold price. So we've broken the dome. We're just consolidating. Bang. So Aussie dollar gold. So that's the same thing. This will get a bit of a boost as the Aussie dollar drops down. So it's always good to know Livewire. It's a sell for Livewire in case you want to listen to them. Bitcoin's struggling a bit too. Wouldn't want to take out this low here, otherwise that's pretty bad. So we look at the gold to Bitcoin ratio. Go to a weekly chart. So you want to be in gold, not Bitcoin. Okay, the girlfriend, silver. How's she looking? Oh, it just looks fantastic. Look at that. Look at that. Look at the legs and the mini skirt on that. My God. Sorry, ladies, for being, if that's sexist. Think of it as a man in footy shorts. So what we're looking at here is Chinese come back on the market now. So in China, silver's trading at $99 an ounce. So that's a premium of $12. So they really want their silver over there. You can see for a long time, well, it should, otherwise that's arbitrage opportunity. Like the USD price in China should be the same as the USD price in US. I mean, yes, there's a bit of, you can do some shipping and storage thing, and so you'd be shipping money to China and selling your silver. Anyway, it's bullish for silver. Hope you got some. So platinum, just basing. Palladium, basing, looks very nice. Copper. Oh, copper's getting ready too. Okay, copper's getting ready too. Okay, Marcus Padley sold his wire, his copper miners the other day, last week. He'll be kicking himself. Oil. Oh, oil price getting very close. So the oil over the S&P 500. So we've now got a situation where the price of oil is outperforming. Well, it has been actually since the beginning of the year. You would have made more money by investing in oil than the S&P 500. Who would have thought that? Natural gas back at support. Oh, iron ore catching a bit of a bid. Maybe time to get some iron ore miners. Anyway, that's just the weekly candle. We'll see how we go. Lithium. So again, lithium's, well, it's strong. Uranium, the spot price. So it's pretty illiquid, this market, but that's forming a bottoming formation. It's becoming a big sector for the tech companies who want to secure uranium. Coal, so thermal coal. So that's all right, just consolidating. Coking coal. Geez, that looks even more bullish. It's dangerous when you see these. The next move is unlikely to be down. Nickel. So nickel's finding a bottom. Aluminium, that's finding a bottom. Tin, so that's tin here, so that's found a bottom. And we'll finish off with soybeans. So soybeans are just chilling here, we're getting ready to break out. Alright, that's your daily wrap. Join the channel, $10 a month. We do ASX US shares, ETFs, help you build your portfolio. Otherwise, hit the like button if you enjoyed that, and I'll see you tomorrow.